Well, hello, everybody. Welcome to this week's edition of Market Insights. Steven Sitkowski here. Once again, it is July 28th. Hope you had an awesome weekend. It's a beautiful one for us. And let's get to it. Quick reminder that everything that we do here is for educational and informational purposes only. It is not intended as investment advice. These are just my observations on the markets. Hopefully, some of this will help make you a better investor. The US cut a deal with the EU. We brought our tariffs down to 15%, which seems to be a doable number. Trump's talking about 15 to 20%. With the rest of the world or the majority of the world, he will make certain exceptions depending on what he thinks will advantage us. But it's kind of nice. We've got a number of tariff deals that are now in place prior to the August 1st deadline. So market seems to like it. The world seems to be okay with it. So here we go. 150 companies are going to be posting earnings this week. So there's a lot of potential market movers. So we'll be keeping an eye on that for sure. The next Fed announcement is due out on Wednesday. There won't be a rate cut, but of course, there will be the initial statement from Chairman Powell and the press conference that will follow. I don't think we're going to get any surprises there, but one never knows. Also, I expect there's going to be a couple of dissenting votes. I think there's going to be a couple of voters who were in favor of a rate cut this time around. 10-year Treasury has gone up a little bit in anticipation of the fact that we're not going to be reducing rates, at least now. So 10 years at 4.414, and oil price is pretty steady at 66.43. Market breadth last week. Look at the new highs versus new lows. Man, that is impressive. So that's on the New York Stock Exchange, on the NASDAQ, and then advancers versus decliners. I mean, it was just a fantastic week all around. Nice week to make some money. I hope you all did. Last week's winners. So West Pharmaceutical Services led the group up almost 25%. Lamb Weston Holdings, 24%. IQVIA, I have no idea what they do, up 24%. Something to do with healthcare. TE Connectivity, technology company, 16%. Baker Hughes, almost 16%. Thermo Fisher, 15%. Decker Outdoors, which is taken on the chin, but looks like they're trying to make a comeback, up 14%. Charles River Lab, another healthcare, 14%. Biotech, another healthcare. Had a lot of healthcare represented, 13%. And Newmont, up 13%. What to watch this week? Boy, it is a heavy duty news week, with the exception of today. So as we look forward to tomorrow, the job openings, the JOLTS report, we're supposed to get 7.4 million available jobs, and consumer confidence is supposed to tick up. That'd be a nice thing. On Wednesday, ADP employment number. Last month, it was a negative number, minus 33,000. We're expecting it to be a positive number, 82,000. GDP is supposed to come in for the second quarter at 2.3%. That's strong. Pending home sales, that's not going to do anything. Comments from the Fed chairman certainly might. Thursday, we have initial jobless claims, forecasted at 221,000. Employment cost index expected to go up 0.8%. We have personal income only expected to go up 0.2%. Personal spending supposed to increase. PCE, personal consumption expenditures. That's the Fed's preferred inflation measure. So year over year, 2.7%, still a ways away from 2%. So I think I'm one of the few people who does not blame the Fed for not lowering rates. I mean, I like low interest rates too, just like everybody else, but I don't want inflation to take back off. Not that it's going to hurt somebody like me, but it's going to hurt people that are already hurting. And then on Friday, the U.S. employment report, that's going to be an important number. The unemployment rate supposed to tick up just a little bit. Hourly wages. So, man, it is a busy, busy week. You're going to want to keep an eye on these various data points. Tell you a lot about the economy and where the market is likely to go. Last week's heat map, Lilly, Merck, big winners. So it looks like healthcare had a really good week. Industrials had a really good week. Palantir up 4%. AMD up almost 10%. But yeah, a lot of great news for industrials. Year-to-date returns been a pretty darn good year. S&P is up 8.6%. The Nasdaq is up 9.3%. Stocks trading above their 200-day moving average. We're now at 63.34. So anytime that is above 50%, that is bullish. Market sentiment has fallen off a little bit. I don't know the reason for that. It can't be from anybody looking at the facts. They just have to be listening to people that are scaring them. And in fact, the bullishness is below average and the market's at an all-time high. Now, you might be thinking, well, maybe it's because it's at an all-time high. That'd be somebody who doesn't understand the markets. When markets hit all-time high or stocks hit all-time highs, generally they go higher from there. And just a slew of earnings announcements. We've got Meta and Microsoft. So that'll be coming out on Wednesday after the bell, Thursday after the bell, Amazon. So those are the biggies, but there's a bunch of major companies in here. Visa, we always learn a lot, about state of the consumer. Chevron or Exxon and Chevron both will be coming out on Friday. So super busy earnings week. 38% of all the stocks in the S&P 500 announce this week. Take a look at the charts. Then I'll show you the track record on our trade ideas of the week for this year thus far. That's just a beautiful sight. I mean, ever since we crossed above the 50-day moving average, it's just been and how anybody could be looking at this and not be bullish at the moment is, it just tells me they're looking at the wrong stuff. So that looks fantastic. I'm guessing the Qs probably look similar. Yeah, can't even tell the difference. So, yeah, we're firing on all cylinders. Speaking of firing on all cylinders, in what's been a reasonably tricky market to trade, we had the big down at the beginning of the year and then the recovery and everything was news driven. This is for 2025. Hang on. There we go. So beginning the first of the year, we have now closed 58 of our trade ideas. Average return per trade, 13.9%. That includes the winners and the losers. That's not an annual number. That is in less than a month. 13.9% in less than a month, with a winning percentage of 94.8%. So pretty impressive stuff. All right, gang. Well, thanks for hanging with me for another week. I will see you next week. Until then, be safe, be blessed, and bye for now.